Hi, welcome everyone. Let's go through today's price action analysis of Bank Nifty futures. It's going into the budget session, so days are becoming trading range days mostly. So you need to be careful with over trading. I mean, avoid over trading as much as possible. Okay, so let's go through bar by bar. Price opened within yesterday's range, big gap up, but bulls were not able to hold the ground, and it closed as a bearish bar and you can see that it has a big tail on top and somewhat on the bottom as well. So the bulls did make an attempt to go high up, but it failed. Right? Bulls bought the close of bar one and try to push the prices up. Bar two closed bullish, good uh, signal bar. Those who wanted to go long, assuming that it is a failure of bears to continue. This is a pattern that I don't trade, so I just keep quiet. Then bar 3 is a follow through of this bar 2 bullish momentum that they were building. Bar 3 went up, but it has a tail on top, so these uh, bulls who bought in this zone uh, are holding it probably below stop below this level, right? Now what happened next is bar 4, price opened bearish. It tried to go up very little and pushed down. Bar closed bearish, poked below bar 2's low. So those who are holding stops below this bar, probably they got triggered and that fueled the rally or fire on bar 5. So bar 1 is a trading range bar with tails on top and bottom. So that basically indicates a possibility of a trading range day. Uh, it's not 100% certain indicator, but it does help. Okay, so bar 5, there's a breakout below bar 1's low, but because of trading range possibility, there is overlap between first 4 bars of the day. So we'll see if a failed breakout materializes, and that's what happened. Bulls bought the close of this bar. You watch the price action very closely. That is very important. Bar closed here, it opened here, right? There's a gap up, so bulls is showing some sense of urgency, right? It closed decent, so you go long above bar 6 high, right, and it gets triggered, but entry bar is weak looking one. It has a tail on top, so bears managed to apply the pressure and all the bullishness was sucked up. Right now, depending upon where you got filled in and your stop is 10 points, you might have been hit on this bar's low, which is bar 8 low, or if you survived, this bar closed positive and bullish but within this bar's range only. So if bulls were so strong, why is this move stalling, and why are they not able to continue and push the prices up quickly? So where is the urgency? That's not there. So that's a sign of weakness. Then bulls made another attempt. It stalled here, so making a micro double top with bar 7, and bar closed bearish, but again it has a tail on the bottom side. So not much clear at this point of time, but definitely those who bought about this are not feeling good about the long position. Then there is a breakout below bar 9 low, bar 10, so bears definitely taking the charge. Now possibly these bulls who bought here as well, thinking that there's a failed breakout and it will continue to go up, they will scale in. They did not get a chance to scale in below bar 8's low. Now they will scale in. That's why you see bar 10 closed here but gapped up. So bulls definitely tried to push the prices up and at least get out at break even. That's what they did. They bought here, they scaled in here, and then they gave up here somewhere around the break even. That is where you get short. How do you do it? Basically, the moment you have to anticipate. That is number one important ingredient for you to be successful in trading, right? Anticipate. So you knew that these bulls are possibly trapped. They couldn't get it past the zone here and make it go up all the way up. So, and after looking at these 2 bars, they're disappointed. So they'll try and get to get and scale in. So that's what they did here. And when you see the tail forming here and price going up and coming down, immediately you place a short order below bar 10. That's where it triggered. Good entry bar. A lot of people thought so. That's why you see good entry bar closing at its low, and you just let it run. Set tight. even though it is into a resistance, sorry, support zone of EMA, but there is a room that you can count on, right? At least 30 points room was there, right? Then there will be bars like these, which is bar 12, which will test the break even point, right? Some of the bears who are weak will try and move their stop to break even quickly, looking at this kind of entry bar. And that is exactly what happened here. They will hit, and then immediately price came down on bar 13, 14, and 15, and you got your profit target, right? So that's how you could have taken the trades on the short side. This trade basically got stopped out, and this one gave you a 30 point. Even 40 points were possible, but you had to sit through all of this. Plus there was a support coming in the form of an EMA that could have stalled the move. You never know. It is easy to say that yes, there was a 40-point profit target uh, after the fact, or once the chart is in front of you. When it is happening in real time, it is not known. So you decide your own rules, that you are not going to give up profits just because you need a few more points, and you're taking that risk, right? So then what happened next is basically they formed this II pattern, two inside bars after failure at the EMA. Bears try to push, but again bulls came in. They try to push the prices up, but look at these bars, tails on top of each of these bars. So an overlap is there, tails on top of this bar. What do you see? Bar failed to go past bar 15 low, which is this breakout fail, and bar is price is failing to go past bar 15's high as well. So there is a kind of a trading range that is being formed. That is where I drew this rectangle, and it is around EMA. EMA is at the middle of this range. This is the danger zone that you need to avoid getting sucked into or getting trapped into, because that is where majority of our over trading can happen, and this results into devastating losses, right? So if you can identify this well, that tails are developing, there's a lot of overlap, and around EMA this is a danger zone, right? And then you can see that there were setups like these disappointments or traps for sure, wherein after bulls fail here, bears pushed here. What do you see next? These bulls try to possibly scale in, and they give up, scale in and they give up, give up. But why is it taking so long, right? If it is so urgent, right? So you can't go short here because of the price action that I explained. We are in a trading range. This is not a trend move at this point of time, even though it is from the start of the day. But right now it is not the case. We need to wait and see if there is a breakout beyond this range, let it succeed, and then you go with the trend, right? That's exactly what happened. Those who shot below this bar got trapped, and price went up one more time. And then there are some possibility of scalps and all that, but you need to be very nimble and fast to be able to do that, right? Ultimately, if you're a beginner, avoid this kind of a zone, and you will really improve your trading by a big margin. And you can see what happened next uh, is basically if the price was hovering around this zone only, trading in this area, and nothing much has happened after that, right? I stopped trading around 9:45 or so. That's why I did not talk about any other setups after that, but you can see that this particular rectangle zone or trading range zone is still applicable, right? That's it for today. I hope it helped. Thank you for watching.